Hey everyone, in this video I want to do a portfolio update, reveal my portfolio right now, what I've sold, what I've bought, what's some of my thinking and rationale behind the moves. Of course, nothing in any of my videos is personal financial advice. What I am doing could be wrong, could turn out to be wrong or the wrong move. Not saying I have all the answers, no one does. So this is what I've done and I am doing right now. So okay, March 22 portfolio update. I want to just share my returns. Last month, down 7.5%. The last 3 months, 25% down. The last 6 months, up 13%, and year to date, down almost 18%. Actually, it could be a little bit better since I took this screenshot. But yes, not a great 2022 so far. If we look out further on a 1 year basis, I'm at 21%. 3 years compounded 138%. 5 years 54%, and over the last 10 years 28.8% compounded. And that's since 2012. I actually started investing in 2009, but I would think it'd be similar across those years as well. 20, about 20, almost 29% since 2012, and probably even before that. So the last time I did a portfolio update like this was back in July of 2021, and this is what my portfolio was then. It was almost all Tesla. I had a little bit of very good food company, some Lemonade, a little bit of Redfin, and some Square. So that was what my portfolio was then. Currently, I only own 2 stocks, and those are, what are they? Tesla and Lemonade. Those are the only 2 stocks I'm owning right now. So this means I sold some stocks. I will explain my reasoning for each, so do not burn me at the stake for selling your favorite stock. If I sold your stock, all the stocks I sold could still be very successful investments. My portfolio now is really this. I even concentrated harder into Tesla. I'm around 96% Tesla, and Lemonade about 4% right now. And Tesla cost per share is around $124 per share. And you might be wondering, why so much into one stock? Why so much into Tesla? And my feeling is, with any investment, you need to consider what I call the probability curve. What are the probabilities of various outcomes occurring? It's not enough that an investment could do a 10x return or a huge sort of upside on the positive. You also have to ask how likely is that return. Just because it's possible doesn't mean it's actually probable. And likewise, you need to ask how likely a loss is for the stock. Could it go bankrupt? Could it be completely wiped out? Or are those almost sort of negligible risks? How likely are those? Ideally, you want to find companies that you will very, very likely have large returns for and have very little chance of a loss, and then concentrate into these companies. Of course, to know the probabilities around a company's success or failure, you need to do a lot of research and try to realistically answer many qualitative questions about the company. I have a list here I'm going to put up on the slide of some qualitative questions. You have to really have strong answers for the company you're investing in, or really especially concentrating into, to really make, I feel, that kind of move. And for me, I'm not going to read all these questions. You can if you want, but for me, Tesla easily checks every one of these boxes and easily could make a very strong, compelling answer for each one of these questions here. And I'm especially bullish, so for that reason, I love Tesla. I think the upside's huge. Qualitatively, they're just a slam dunk on each one of these. And especially I'm bullish on Tesla right now, as they're opening 2 factories and gas prices are at all-time highs. I think the stock could explode, or it kind of has in the recent week or so, but I think it could explode even higher in the coming year. And if we want to look at some really rough math, if Tesla does 1.6 million vehicles delivered in 2022, this year, then their earnings per share could easily be around $16, maybe even more. So somewhere in that $16 range. It's kind of where the math is working out for Tesla, about $1 per every 100,000 vehicles that they deliver. sort of where they're at right now with the selling prices of vehicles right now and where they're operating. So that's really rough math, but they could be around that $16 range. And if you take a PE of 100, that's going to be 1,600, by kind of early next year. And when quarterly results for Q4 come out, or PE of 90, you're at 1440, 80 or 1280. Right now, I think the PE is like 160 or something like that, maybe even higher, 170. So I think the PE will continue to compress. It might compress down to these levels, but even at earnings per share of this range, you're still going to be, you still have like a 25 to 60% upside in the next year for the stock. Crazy. If they do 1.8 million vehicles in 2022, then earnings per share could easily be $18 or more, and which I don't think is actually unreasonable. They could do 1.8, maybe even higher than that in this year. Depends how well Fremont and Shanghai can expand, and how well Texas and Berlin can ramp. So if they do that, they do 18, then you're talking more like, depending on your PE that stock arrives at, they could be anywhere from kind of 1,400 to 1,800, sort of like a 40 to 80% upside from where we are right now. Again, huge returns. If you think you can make pretty confidently 40% or more in a stock, even up to 50, 60, 70, 80% or more or so in a stock, that is a tremendous investment opportunity. So for me, Tesla has a lot of probability of huge gains with less downside of loss. Of course, macro events could occur and could compress multiples significantly across the entire market. That's a risk I'm willing to take. Even if I took other growth stocks or were into those, they would have that kind of same risk anyways. Okay, and how about Lemonade? I'm still bullish on Lemonade long term. In hindsight, I bought at too high of a price, or bought some shares at too high of a price, but I am still adding shares at these lower costs. And so my average, though, is about $71 per share. It's about 4% of the portfolio. And again, I'm still adding conservatively. I think this year they could continue to struggle after earnings are released, because they did guide this year for peak losses. So things could potentially, get worse or stay flat, I think, for the stock price. Potentially, there's a lot of macro events that affect that as well. But long term, I'm going to be watching closely, and it potentially could be great buying opportunities in the next year or so as they come out of if they're able to sort of start coming out of those peak losses. I think could be tremendous opportunities. And once we get to kind of Q4 2022 earnings, so sort of sometime, next February or March, when those Q4 earnings are released, we'll see a lot more detail on how well their Lemonade car is doing. And a lot of success or failures, I've said before, on Lemonade, I think hinges on that success or failure of Lemonade car. So that's why I'm still watching Lemonade. We'll be watching closely all the companies now that I sold. I'm just going to go through as well. And I am continuing to watch all of these. It's not like my thesis on any of these is totally busted or broken, but I am continuing to watch them. So I sold Square at about $232 a share. My main thesis around Square, I guess it's called Block now, is that it was really about the Cash App, that if they could make sort of the number one banking app that's everyone uses, and because everyone's using that same banking app, there's network effects of having more people and businesses and individuals under one banking roof. You could have a lot more streamlined, cheaper transactions, safer transactions, more instantaneous transactions, and that could still all happen. But it seems I'm just a little bit concerned that the market for that is such a competitive market. There's so many options of how you can conveniently send funds and money. So I'm not sure if they're really going to create the network effects I was talking about. Seems like there's a lot of issues, like Square challenges in trying to expand globally with a sort of a banking app. I would love Square Cash App to be in Canada, and I would be signed up and trying it and using it, but we still don't have it here. So it's really more still pretty US based. So that's kind of some of the challenges of Square that I decided to sell, and I still think it could be really successful. But I still might buy back into Square, but I felt more conviction about Lemonade and Teslas. Redfin, I also sold at $48 per share. Still, I'm curious about this company. Still would love to see real estate disrupted. I hate that you have to pay very large, expensive fees to a realtor just to sell your home. And I still feel like that from a consumer perspective could be much cheaper and simpler if information was more freely and openly shared. And so I hope Redfin can do that. I do think it is a challenging business to compete in, and just because it's so entrenched the way realtors, the realtor market is set up. But yeah, I'm still tracking it. I sold it at $48 a share. It looks like a great sell, but I mean, I moved a lot of that money into Lemonade, which dropped, but share price was also cut in half from when this was. So it's not like I made huge gains because I sold $48 a share, and I also bought Lemonade, which also went down significantly from this. So still watching, and we'll provide more updates on Redfin as I am able to, especially if I buy back into it. So the Very Good Food Company, and I sold it about 68 cents per share, and it seems like a company that has a product that people really do love, that are vegan eaters or wanting to eat plant-based meats. Seems like there is a future for plant-based meats, especially from an environmental perspective, possibly as well, but people also just preferring that kind of diet. Who are talking to those sort of people really seem to like the Very Good Food Company's products. But it seems like I'm just a little bit wary about some of the management. Also wary about their report they came out with, or sort of not report, their update that they sent out a few weeks ago. It seemed very ominous, very bearish on the company. Still haven't had Q4 results come out, which seems like it's sort of like they're dragging their feet on that, or trying to delay that as long as possible, which does not seem like a good sign. If you had really good news, you would be eager to issue that news. Yeah, what else can I say? I've also found it frustrating at times. For me, one of the biggest problems about Very Good Foods, the biggest bottleneck they had was production. They needed to produce more product because they had more people wanting their product than they could produce, right? But a lot of their updates really sort of beat around the bush, or gave, kind of random email updates they'd send, might tell about a certain product that they sold, record numbers of something at Thanksgiving, a stuffed beast or whatever, or little updates like that, but they don't give it like the real meat of like, how is the production and of the Rupert facility, the one in Vancouver, this bigger facility, going? Are you scaling production? Is it effectively, scaling? Are you managing costs in that scale effectively? There's very little, seems like little information, especially in the updates, around those, which I found frustrating at times, because to me that is the most important thing. Like most of the other updates I don't even care about at all. Really, it's pretty scary when the stock price is this low already. Are they going to run out of money and could be face bankruptcy or something like that? Seems like a genuine risk. So I decided to sell my shares. I'll still be watching it. I'll still be covering it for you guys, hoping their Q4 earnings come out here soon. But that's where I'm at with Very Good Foods. And I am considering starting position in one other company here I am looking at closely, is Upstart. I will be trying to share more thoughts on that as I learn more about this company and continue to watch it as well. So that is one I am considering starting a position in. Okay, that's a little portfolio update. Again, nothing is financial advice. And remember, it's in the bag.